I feel it has been a natural evolution. Many of us got our hands burnt also, big ones, small ones also. I feel that there is space for everybody in the ecosystem, and why I say Pakistan can leapfrog, because there is a lot that has happened in the region and other parts of the world we can learn from. So we don't necessarily have to make the same mistakes, but the people who are outside of that radius in the rest of the country are still widely excluded, and nobody wants to really, I think the will, I'm not talking about the government, I'm not talking about the regulators, I think the private sector needs to get their hands dirty.
Joining me on the couch all the way from Pakistan is Kabeer Naqvi. Kabeer is chairman of the Pakistan Microfinance Network. Are you guys being able to make the leaps which actually can teach the rest of the world? Because to be honest with you, what sort of annoys me in every market is how poorly the MS and the S are served, including here.
Last 2 years, we've taken a huge hit. And if you talk about it, financial services particularly, the reason...
No, I'm talking specifically financial services, fintech, young, enthusiastic innovators.
I think there is no dearth of talent in Pakistan.
Welcome to today's episode of Couchonomics with Arjun. Joining me on the couch all the way from Pakistan, I guess it's not that far to come, is Kabeer Naqvi. Kabeer is chairman of the Pakistan Microfinance Network. And formerly, he was the CEO of UBank. I met him about 18 months back when he was still with UBank at a workshop we actually hosted for them and a number of other, collaborators. Since then, we've stayed in touch. But in any case, that's a long introduction. Kabeer, welcome to the couch.
Thank you very much, Arjun. Thanks for having me here.
You've already topped one list of all the guests I've had. You are by far the best dressed guest I have had.
You're very kind.
On the show.
Very kind.
I actually feel like I'm underdressed now, but I guess I can't change my clothes anymore.
I never asked if there was a dress code, so I just came as I was.
No, you did. And thank you for making it. I know we were in touch and you mentioned you were going to be here. So we said, let's do this episode. And I'm aware that you have to catch a flight. So we'll try and keep this conversation for about 45 minutes. So Kabeer, I'm sure, I've had people from Pakistan on the show previously, right? I've had fintech founders who have come from Pakistan. I haven't had anyone who actually operates as deeply as you do in Pakistan, right? And if I take this MENAP region, right, Pakistan is a fascinating market, right? It's massive, it's got huge potential, but also massive challenges, right? Sure. So let's kind of start with the audience, because I think the audience would really love to hear from you in terms of just paint a picture about financial services in Pakistan. What are the challenges? What's working? Where do you think more effort needs to go?
Right. Well, thank you, Arjun. I think that is that's going to set the tone. So for the audience, at the outset, Pakistan is a country of 250 million people. And the exclusion levels are close to 80%. I'm talking about financially excluded people. 64% people are less than the age of 35, 51% women. And I can go on and on, about the opportunity and the challenges that are there also. So coming to financial services, pure banking, 20% Pakistanis are banked. I'm talking, and credit, if you talk about pure credit, that's even lesser. So because of the mobile wallets, you see very high numbers in terms of total Pakistanis having bank accounts. The Asan mobile account, what we did many years ago with Easy Paisa, brands like Jazz Cash, UPaisa, and there many fintechs coming into this space as well for payment purposes, right? And we'll do a deep dive. What is the difference between overall branchless banking or financial services and payments? Because in the recent past, what has happened is many people have misconstrued payments with full-fledged financial services.
Agreed.
That's a fraction of the whole thing. That's what I feel. So this is where we are. So I will talk a bit about microfinance in this whole context. So in 2001, the central bank came up with a separate ordinance for microfinance banks.
Okay.
Previously, it was just commercial banks, and we were dealing with SMEs and retail and consumer, like in any other country. And there was a dire need, obviously, because people, when you look at the poverty pyramid, people who are economically enabled poor, as they call them, I don't like the word poor for my clients, but this is how it's called. So those are the people who had needs that were being fulfilled or not fulfilled by informal sector, in terms of credit, savings, payments, all of that. 24 years down, we've got about 10 million clients, which is not much, but still it's something. We were zero, 25 years ago. And we've got about 29 to 30 microfinance institutions, non-banks, and about 12 banks. deposit-taking institutions. Those are regulated by the central bank, and the rest are regulated by the Securities and Exchange Commission of Pakistan.
You said 10 million. It's not sufficient. You've got 200 odd million.
250 million.
250, 80% are unbanked. Why only 10 million, if I may ask? So what's been the challenge here?
Yeah. So there have been many challenges, Arjun. And as the chairman of the network, one of my prime jobs since last year, June, is to do a lot of advocacy with the decision makers, the government, the central bank, the SCCP. And although there's been great effort from the regulators in the past, but obviously public, private, everybody has to come together. So I'll give you a brief background. So the MFIs, and we say that for the banks I say, because I was running a bank until recently, we stand on the shoulders of those who came before us. So MFIs really set the stage, the non-banks, over the last 25 years. The problem there was low level of capitalization. They were mostly grant funded or borrowed funds from the IFCs and ADBs of the world. There's only so much you can do with grant money because the kind of scale that is required, and that's why there was a need for banks to come into this space, hence the ordinance. So when the banks came in, we saw scale. So the total credit out there for these people is about 500 billion rupees. Just to give you perspective, around 4 years back, it was less than 300 billion rupees.
Okay.
So I think we are hitting the infraction point where we're actually going to scale. And the new regulations, I'll give you a few. In terms of regulatory interventions, for this particular space, central bank came up with TPSP licenses in the recent past, EMI licenses. Recently, they have given 5 digital bank licenses also.
What is the TPS license?
TPS is service providers.
Okay, so third party service provider. Okay, sorry,
yes.
Go ahead. So,
yeah.
TPIs,
EMIs,
and
those
digital
are
banks.
and digital banks. Now there are 5 licenses that are issued to new banks, and those are going to be digital retail banks. They will be operational next year, most likely, on top of the microfinance banks that we have. The biggest intervention in this space, if you ask me, in my view, by the regulators was the issuance of the branchless banking license in 2008.
Okay.
And we were working for Tamir Bank at that time. It was a new mom and pop, owner-owned microfinance bank. And then Telenor acquired 51% of that. And we launched this brand by the name Easy Paisa, which is now a household name in Pakistan. And it was the largest bank-led branchless banking model at that time. That did very well in terms of payments, in terms of remittances, international, local. But the only piece that the market is still wrapping its head around is the credit piece. So in Pakistan, I'll give you an example of the microfinance banks. How have they been successful? Small, but successful most part, 22 years. And then I'll talk a bit about COVID and floods and all. That happened 3 years ago. These people value the intimate connection with their banker.
Agreed.
The peri-urban and rural part of the country.
Yeah.
So the relationship officer of these banks, they're supposed to know if somebody's pregnant in the house, if there has been a death, somebody's sick, what's happening to the crop, what's happening to the animals, when you talk about agri-pure. So that value has to be there. So if you try and do pure digital play.
And that's what's going to be my question in the sense that I've seen a decorrelation, or at least I actually think that it's a bit perverse that you want to go completely digital to an audience which you need to bring up the curve, so therefore you need to be intimate. So how are you guys solving for it?
So what we've tried to do back at UBank also, we divorced savings from credit.
Okay.
Right? And we divorced urban from rural.
That I can understand.
Right. So for urban, we had a very clear high street bank-like strategy for mobilizing retail deposits from the urbanites. And unlike the regular banks in Pakistan, where a local migrant comes, sends money, remittances back to his mother or sister or house, and that money is used again for house mortgages and car leases and credit cards for us. We were actually mobilizing money from the urban centers and lending in the rural sector.
And so that's my question. How? Because see, the problem that you're stating is a problem of a number of emerging markets, right? Which is, you can't be prohibitive on the credit side, right? Because in effect, then that's detrimental to the society, right? And you're basically taking the poor for a ride. But if you're not being able to charge those prices with arguably high default rates, and I'm sure you will correct me on the default rates and we'll get there, you can't actually give the attractive returns to the savings. And then why is an urbanite wanting to come to your bank in the first place why isn't he or she going to, the 20
larger
or
ones.
the 20 commercial banks? So this is a multifaceted conundrum. So I'm going to shut up. I'm going to listen to you how you guys do it in Pakistan, because I'm sure there's a lesson for every market in this.
Right. So Arjun, the biggest challenge for us was that we were a small, emerging microfinance bank. The same was the case with Tamir Bank, and then followed by UBank for 8 years that I was there. That how do we compete with the big guys in the urban markets for deposit mobilization? One thing that we could offer was a higher rate on the deposit, and I'll tell you how.
Okay.
Because the asset yield, if you look at the life cycle of the the farmer, or the rates that usually the discussion is about the asset yield and not about the margin. I'll talk about bit without getting too technical.
No, you can.
This is a question I've gotten all my life, actually. So what happens is that the margin of the farmer is very high, 120 to 130% on the sale of the crop. Now that's why the local money lender charges as high as 80%, 90%. You know that. So these banks charge about, say, 38, 40% IRR. Now, in Pakistan, particularly in the Pakistani context nowadays, where the discount rate is about 22%, highest ever, and I think it's highest in the region nowadays, right? For the last 3-4 years, that's what we experienced. So you take that out, you're left with, say, 18 to 19%. The cost of operations in relative terms to the yield for any microfinance bank, because we are banks, we have to comply with the banking regulations, compliance, I mean, that's expensive, technology, all of that, is hovering around 14-15%.
Okay.
So the margin, and then you have to cover the NPLs also.
I was going to come to that.
Right?
Yep.
So you talk about 2.5-3% of margins. In good days, when the interest rates are lower, it could increase to, say, 5 to 7%. But globally, the default rate for microfinance, acceptable default rate, is about 7%, which is not that bad for a mass level of loans, unsecured mostly. What we did, how did we manage that? So for particularly UBank, I want to share this example with you. When we realized that we can't be a one-trick pony, we have to scale, we have to grow. So we used the old business model canvas, and we unbundled it into 6 canvases. The first we called the urban retail.
Okay.
Urban retail, high street banking, the staff was all commercial bankers. The products were all commercial bank, like the branches were expensive also, and in all Karachi, Lahore, Islamabad.
Okay.
Clearly. And then we had a very clear big marketing budget, so we had to compete as a new bank in town.
Okay.
So that's to mobilize deposits, retail deposits. Then the rural retail, which was the old part of the business, the conventional micro loans and all of that. The change that we brought about in the market was that we lent mostly against gold. Now, I personally got a lot of flack initially from the microfinance community, particularly pre-COVID, pre-flood, that, this is maybe against the spirit of microfinance. Now, India and Pakistan and Bangladesh also, everybody's sitting on a lot of gold, even in peri-urban rural area, and that's a dead asset. And we started at Tamir Bank, and then we scaled it really at UBank. 60% of our lending in the rural part was backed by actual gold.
Okay.
Now, beautifully, there is sentimental value to the gold also. So we gave a rate break, because when we are covering ourselves again with gold, we were not charged that high. The other thing is free locker service, and these are not gold biscuits and all these. So there was sentimental value. Everybody wanted to get their gold back also. So the default was in points.
Excellent.
Right? The most beautiful part is the risk weight on the balance sheet was 20% as opposed to 100% of capital utilization. So we could grow 5 times, very secured, in the same amount of capital, as another bank that was lending unsecured. So these were some magic ingredients, the gold-backed lending, the urban deposit mobilization, so we could scale that much. Now, the third vertical was the digital bank vertical. Now, with the new digital banks coming in, we realized that we were owned by a telecom. And telecom then ultimately owned by Ian here, well-known name here. So we wanted to get into that space, but in Pakistan, we realized there has to be a hybrid strategy. You need an omni-channel in a market like Pakistan. We were very clear, the board, the shareholders, everybody. So we brought in the new technology. We were getting in the new people, the data scientists and all that, AI and all of that. We were putting that whole stack together while not touching the rural retail, the urban retail, and this was the third part. Fourth, we realized that there is a dire need of Islamic Sharia-based financing in Pakistan.
Okay.
Every survey that you do, people say, okay, we're fine with conventional, but if you give us an option, we would prefer that. So we actually were the first microfinance bank that went for Sharia-based financing also, and we were getting great results. We were 60 branches, by the time I was leaving. So this was the fourth vertical. Fifth, the corporate vertical. Corporate vertical, everybody would ask me, corporate in a microfinance bank? So the S of the SMEs and the SMEs, largely ignored by very large
the
institutions.
micro and small
They
businesses.
have transaction banking needs, they have employee banking needs. So we started capturing them, and we were doing club deals for deposits as well as credit to their employees also. That worked very beautifully. Last but not the least, treasury and corporate finance.
Okay.
Now, just to give you perspective, because the license, we were a bank, so the license allowed it. Maybe nobody really focused on it, and everybody was too fixated on only the micro loans.
Yep.
And those were prone to floods, those were prone to COVID, and so many other things. So what we did, we hired investment bankers. We hired commercial bankers who could mobilize funds. So just to give you perspective, and I'm using UBank as an example, everybody can do it, and that's what I'm a big proponent of. We had about 100 billion plus in deposits and 100 billion plus in bank borrowings. We were one of the largest clients of the commercial banks and as a microfinance bank in Pakistan, which was very unique. And then we were creating a very positive arbitrage situation, just like a bank, because we experienced interest rate spike in 2021-22 from 14% to 22%. Now the treasury bills, and there is a category of floater that resets the pricing in 2 weeks. So while everybody was suffering, people who had taken long positions were booking losses. What UBank did was we kept on picking up this money for 6 months, 1 year, 2 year, tenors, right? K plus 0.2, 0.3. We kept on investing while disbursing also in gold loans and other loans in the treasury bills, which were repriced positively, and we created a positive arbitrage situation. And we wanted to ride the wave, and we did. 35 to 40% of our bottom line started coming from treasury. A 50 billion loan book and a 150 billion treasury book, end of December 2022. So these 5-6 things that we did, and broke down the balance sheet, and I'll take, usually they don't take names, but I will. I am a follower of Jamie Dimon, right? He is an undisputed king of banking. So he talks about this fortress balance sheet all the time. That you need to, your balance sheet is your fortress. You need to focus. Every bank CEO or banker must focus on the balance sheet. That's what we try to do. Gold secured loans, government paper, collateralized lending. So when everybody and their brother and sister got a hit, post-flood, post-COVID, we stayed afloat. We kept on opening branches as we were discussing, and we kept on growing. So this was a bit of our strategy, which worked very well. And this is, as the chairman of the network also, I meet a lot of CEOs of other microfinance banks and commercial banks and MFIs also. So I am trying to push everybody and working with the regulators also to actually open up the regulation a bit more for these institutions so they can get into more novel kinds.
So Kabeer, so sounds brilliant, right? But I'm a consultant. We can all write strategies with all due respect, and it seems that you got to give me the reality of behind this is too fixed. So let's part the regulation on the side, because that's not something you and I can influence. How do you make these 6 canvases, as you said, sort of mold together? Because they're all interdependent in some form or the other. They're not sort of 6 speedboats, right?
Yes.
How did you make that happen? Because that's a human side to the whole stuff.
Absolutely.
So what's the sort of secret sauce out there?
So Arjun, you have to have the governance right on this one. So first of all, sponsorship of the board.
Yeah.
I know when you're creating these separate sections, I know it could easily become silos. I hear that is the biggest fear when you're saying that these guys are commercial bankers and they're just
totally
focused on this. And so what we did was we completely changed the structure of the bank. Under the management committee, we had 6 canvas heads, as we called them.
Okay.
And everybody was the subject specialist, and they had to work together like this, like a fist. So my message to the canvas heads was that you people, your lives depend on each other. And if we end up becoming silos, this whole thing will go the other way. So that was the human aspect, as you mentioned. So I think the right kind of leadership, selection of people, and I think the tone at the top needs to be correct. And the rest is that what I'm sharing with you.
But how much fallout did you have? Because you can never have 6 equals.
Of course.
Right? There would be one part of the business that at a given time, which is outperforming or hitting the ball out of the park. Then they start feeling like they're subsidizing the other 4 or 5. So how much of the norming, forming did you guys have to go
Yeah.
through? Did you have to make a lot of organizational changes? Did people have to leave? Or was it just on day one you just had the right six people?
No, yeah, you're right. It doesn't happen like. I'll give you an example from the military.
Right.
Right? And I think military, we can learn a lot from it because it's been there since ever. So the signals guy knows that he's not the artillery guy. The artillery guy knows I'm not infantry. And the SSG commando knows what his job is. So what we tried to do since day one, we were very clear, this is ops, this is commercial, putting food on the table, right? So whatever salaries, benefits, whatever. And everybody was very clear about the P&L of each and every one. Plus, these canvases were at different stages of the life cycle. So the rural retail was the real bank at that time, at the back of which all these canvases had to grow. So the respect element had to be given to the rural retail who was putting food on the table. Then the Treasury Corporate Finance SWAT team, maybe 10 people, 150 billion rupees. And here you had 3,000 or 4,000 people managing 50 billion rupees. So they were different dynamics. So what we used to do is to get everybody together, and everybody knew how they were dependent on the other party. Otherwise, Arjun, as you mentioned, it would have failed. So if you tell people day one, this is your role, if you really like to be commercial and you don't like operations, apply. But don't sit here and say that, I want something similar or same what the commercial guy is getting. So this is the tone that we set day one, and everybody worked in how there were issues, of course, when you bring in people, for instance, microfinance bankers and commercial bankers and data scientists and everybody all in the same organization, because we were trying to make something very beautiful and unique. And I would say most part, numbers speak for themselves. We had scale, and to give you perspective, when we took over that bank, it was 2 billion rupees in balance sheet footing, and it touched 220 billion organically.
Okay.
And I'm not talking digital, it's all brick and mortar and the treasury operations. And the rest, the strategy, it's important to talk about it. Once when the digital piece kicks in, we were working on bots also, on digital underwriting or AI-based underwriting. That would really reduce the human intervention for approving loans, micro loans, not nanos only. Also, that would bring in real scale and reduce the cost also. That was the next step. I'm sure they're going to go that way.
So let me ask a question. Do you follow New Bank at all? In Brazil?
Bit, not in a lot of detail, but yes, and I read about it recently.
So I follow every bank, fascinated with what happens is, here's a digital bank, right, which has got 100 million customers, 93 million in Brazil. I think the bankable population in Brazil is no more than 170, 180. That begs the question, which I want to come back to you. So how many micro finance banks are there currently?
In Pakistan? 12.
12, okay. And there are a number of microfinance non-banking.
About 30.
30. So there's 40, 45, right? Right. So what's the sense behind giving more licenses out? Why not double down on getting these, if I may say, players to actually scale, right? Because are these digital banks pure play digital? They're allowed to be physical, digital?
Yeah, the ones that have branchless banking licenses,
Right.
they can do digital also.
So branchless banking, if I may understand it, is that you don't need to own a branch, but you can work through a third party's branch?
Yes, you can do, and you can offer solutions on wallets outside of the bank.
Okay. So if I partner with, let's say, a retailer, I can use the retailer's environment to get banking products out.
Or a telco.
Or a telco. Okay. So it's not digital in the sense that it doesn't preclude you from have a physical presence. Because
doesn't.
some of the digital banking licenses, some parts of the world, I don't understand why they're so fixated on the fact that they have to be 100% digital, right? So my question again is, why do we give out 4 more licenses when you're saying that there is still scale? Even you said 10 million customers, right? This 10 could be 20, 30, 40 if you continue doing the right things. Explain what the regulator is thinking by giving more licenses out.
So what's happening is, if I put things in perspective here, the size of the problem is expanding faster than we are growing.
Okay.
So when you see in relative terms getting to 10 million clients in 24 years, if you take another 24 years to get to 24 million, Pakistan would be maybe 500 million people. And the size of the problem would just outpace us big time. So the scale that we are required, so there are a bunch of things here. And I think I'll bring in regulation here. State Bank has been very progressive in terms of giving all these different kind of regulations and licenses and experimenting with a lot of different kinds of entities also. And they're encouraging Fintechs to come in also. We'll talk a bit more about that. What's happening in Pakistan is the ones that transitioned from conventional brick and mortar there is a change in mindset that is required also. The right kind of people, skill, the right technology. So the entire thing is coming together. However, if you look at, I'll talk about the poverty pyramid again. The commercial banks are also putting out their digital propositions, most of them. And I think we are overly banked. People in Karachi, Lahore, Islamabad, everybody has 3 apps and 4 banking apps. And, I'm sure it's the case here also.
Oh, here it's crazy. But, but in a number of developing nations, that's the case, right?
So, but the people who are outside of that radius in the rest of the country are still widely excluded. And nobody wants to really... I think the will, I'm not talking about the government, I'm not talking about the regulators. I think the private sector needs to get their hands dirtied, if you ask me. So I'm very happy that PTCL did that, Telenor did that. Now, I'm working with certain people who plan to come in, something in the works also. They're coming in and they realize that there is a dire need and an opportunity for them also. So these licenses, as I said, central bank, the thinking is that these microfinance banks, many of them would also transform into hybrids, if not fully. Mm-hmm. That's the natural graduation. And they'll move up the pyramid also. They'll start serving the S of the SME, which we call the missing middle in Pakistan, because that's not being served. While this happens, there is space for more entities like what is the difference between a digital retail bank and a microfinance bank? I'll tell you. The biggest difference is that these banks will be allowed only 25 branches. Not 0, but they understand and they'll be allowed to have other omni channels with partnerships, and they will focus primarily on clients on the deposit size that will not put in more than 500,000 rupees in the wallet, and 40% of their loans would be consumer, the rest would be agri. And then there are other caps on deposits and whatever. So these will be, if you ask me, will be smaller entities in terms of numbers, but in terms of the number of clients, given the digital platforms that we'll be working on, the partnerships, collaboration they'll be very focused on putting up the digital railroads. So what I feel, a microfinance bank can continue to expand their brick and mortar network and become the darling of all these digital banks also for an omni channel. Because they will, when they do agri, will require that. But at the same time, given the experience that these people are bringing in from other parts of the world, I think Pakistan has an opportunity to leapfrog through these licenses, because these come with a different state of mind also. And I think it's very important to talk about the state of mind, because somebody is doing brick and mortar for the last 25 years and you say, I bring in a new regulation, I switch gears, and this guy or these people are going to start doing everything digitally. We tried it, we experimented it, we did the branchless banking license 2008, we're sitting in 2024. We did well, but I don't think there is much we have in terms of credit, especially that we can write home about.
Okay.
So I feel there is a
Let
need.
me ask. So again, let's talk about that for a couple of minutes, because I might have a slightly different view on this. How many commercial banks are there?
Commercial banks about 30 to 35.
Okay, so you guys have about 100 entities out there who are targeting, I guess they've got 35 banks, about 25 microfinance banks, and about 30 to 40.
12 banks, 40 total.
40, okay. So, and I'm assuming the commercial banks are also now starting to look at the rural market,
Sadly, not in that much. That's the problem.
And this is my question. So my question here is, as a regulator, you also want to create certain stability, right? So you want to, I guess you want to not have concentration of risk, right? So you actually expand the ecosystem, but at the same time, having subscale entities which are not fully capitalized, right? Which don't have deposits, that means they're not able to grow, right? And the reason I keep bringing Brazil is, economically, I find Brazil might have more economic stability than Pakistan, but you're pretty much similar in terms of size, right? You have very much similar sort of economies. There is a very large sort of, outside Sao Paulo, Rio sort of economy. They haven't gone down and launched, 20, 30, 40 banks. They have like a bank who has doubled up. So why not just back the ones who are there? I still don't get it. I understand, you just said you're Jamie Dimon's biggest fan, right? Jamie Dimon has proven that JP Morgan does not have to be a digital bank because they're more digital than anybody else, right? They spend $7 billion a year out of that $50 billion in profit on digital. Arguably, they are the biggest digital bank in the world without being digital. So if they can do it, other parts of the world can do it. Why can't Pakistani banking leaders do it?
That's a very good. So there are different schools of thought, Arjun. Right? And then we can delve a bit into the thought process of the regulators. So let's talk about commercial banks right now. So if you look at the balance sheet of the commercial banks right now, and Pakistan has a very unique scenario. You have a discount rate of about 22%.
Mm-hmm.
You've got average saving rates given by commercial banks to the tune of 3 to 4%.
Okay.
So have I answered everything, or should I go deeper?
No, I get it.
Okay, so without, and at the risk of
got it.
So this is one situation, a unique situation that we have, and the government is borrowing heavily from these banks in the bank's defense, from these banks also, and so where the money supply is going, 9 trillion rupees are lying outside of the banking sector, out of the total money supply in people's houses. Mattresses, but that's the opportunity. And as a student of economics, 1 rupee or $1 from informal to formal has an impact on 1:4 on the GDP, right? So it will be put to productive use. So commercial banks are facing their own set of issues right now. So that's the bulk of the banking happening in Pakistan. The microfinance banks are small and new, and you see mergers are happening here in this space also, as you rightfully pointed out, the ones that were weaker, had weak capitalization base, central bank is encouraging these banks to either merge or being bought out, which happens all over the world. So you will see in the next 3 to 4 years, maybe some consolidation here. But it is important to give some perspective here. I was sitting with my colleagues from Bangladesh, and Bangladesh has about 700 microfinance institutions.
Yes.
We've got 39. Well, 29, sorry. So, and we have now decided in the conference we were attending yesterday that maybe we need to bring all the regulators together next time. So we can understand the regulatory framework as to how did they achieve this number. Plus, the beauty is the larger ones have clients to the tune of 15, 16 million each institution.
Yeah.
Now we are 10 million, the entire sector. And if I take out Nano is about 3 million, we're about 6. Right? And if I take the duplicate loans, now these are number of loans, not borrowers, the number would be even smaller. And if I talk about households, where 3 people have taken out loans, you talk about even a much smaller number of the total households being served. So it's not even the tip of the iceberg. So the opportunities out there. So so it will be a bit of both, Arjun. So there will be some consolidation, but different. I am a firm believer that we need a spectrum of licenses. Like for instance, as a microfinance banker, we've been pushing the central bank, and they've been very receptive to allow us to start serving the S of the SME, the larger microfinance banks, and our customers graduate. We cannot serve them anymore. Maybe they're small enough still for the commercial banks, so they are called the missing middle. They go back to the local money lender maybe. So while this whole thing happens, I feel the digital banks will have a role to play. The proof of the pudding will be maybe in 3 years' time, we'll see whether they fail like the payment service banks in other parts of the world or they actually succeed. Microfinance, if you ask me, the banks will transform into more full-scale challenger banks. Offering more services, because previously when we started, just to give you perspective on this one, we could just lend up to 150,000 rupees. State Bank increased the limit to 3 million. I feel the limit will keep on increasing. On the liability side, we're just like a commercial bank. But for mission drift, to prevent, to make easy money, there were limits put on us. So those limits are now being increased perpetually. We are into low-cost housing. We want to get into main thresher and other agriculture machinery financing also. So I feel that the push is there, and for the digital banks, I can park it because they're not operational yet. So there are 2 schools of thought.
So you're trying to fill the bottom, is what you're trying to tell me, right? So you're basically, because if your microfinance banks are rising up into higher sort of, I may say, giving greater loans, taking bigger deposits, then the bottom continues to, I guess as you said, you're at 250 million population. It's growing at a certain rate. You're going to land up with a bigger financially excluded category, right? Let's bring in a little bit on the fintech side, right? What's actually happening in the fintech scene? Where are they playing a role in all of this?
Yeah, so a lot. I think many things are happening, but whether it's all in the right direction or not. So I'll share my personal view with you. So I'll take you back to 2008. 2008, central bank comes up with the branchless banking license. That is the first intervention where people start thinking about banking or financial services in a different manner than the conventional brick and mortar, and a beautiful marriage between a telecom and a bank, not a bank, a microfinance bank. And I'll tell you, that was no accident. I'll tell you, the proof of the pudding was the size of the remittance business that we built. It was 4,700 rupees precisely. That client was not a commercial bank client. would not have been viable. The ticket size was too small. So those guys who actually went to the general stores for doing remittances on the over the counter, then converted into wallets, were in the space where the microfinance banks were operating, right? So we built this beautiful platform business, did domestic remittance, utility bill payments. Those were two flagship products at that time. Once when this happened, the term payments was being used for the first time in Pakistan, 2008, 2009, and people said, okay, fine, we want to do a payment platform, we want to do this. And many non-banks started coming in, from outside of the world, and some locally established ones also. And State Bank came up with the third-party service provider license, and then the EMI licenses came in also. Now, but I feel personally, everybody got too fixated on payments. With payments, money going. Now, I'll give you an example. What we did with Easy Paisa, the original vision was that we will utilize this entire current account that we are getting onto the wallets into the asset side and make a spread like a bank. Now, that didn't happen. Everybody tried to make the liability side profitable on its own. Right? So you're getting, say, 30, 40 billion, 50 billion rupees of minute small deposits, but you don't have a strategy to build an asset because you're thinking like a telco maybe. And because you own the bank, and maybe in your mind, the bank is a platform to raise deposits, and that's that. And you want to make the business profitable from fee. Now, we were the only bankers in town who were charging cash in, cash out fee, while the rest of the banks in the world were giving freebies for current account mobilization. Right? So you see the difference here. And that's why we just stayed payment focused, and nothing much stayed in the wallets. Because it was more like pass through. And one of the biggest things that went wrong in my personal view is that the OTC business became the biggest competitor of the wallet business. If you're a storekeeper and you're running a general store, if a person comes to you for a remittance like thrice a month, pays you say 60 rupees on 1,000 rupee, why would you open the wallet and send him home once and for all, so the person can do it from the comfort of his or her house, and you lose your business? And you just have a one-time fee to make, right? So the model, somewhere along the way, and we are to be blamed with that, because the first ones we went into that space went wrong. So we could not build the asset side, and we could not see these balance sheets as a bank balance sheet. Now, the fintech space, particularly payments, and lots of payments, and many of the fintechs did not survive because of that. Then came the NBFC era. We are still in it, I feel. Now people have moved towards a non-bank licenses, not just EMI, because they want to build credit books. Right? Again, the problem is coming regarding funding. What are the avenues? For instance, you do an NBFC, you put 3-4 billion rupees of capital, great. You want to build a book, say about 50 billion, 60, where do you get the money from? How can you, so again, now everybody is moving towards different kind of licenses of banks, deposit taking institutions. So I feel it has been a natural evolution. Many of us got our hands burnt also, big ones, small ones also. I feel that there is space for everybody in the ecosystem. And why I say Pakistan can leapfrog, because there is a lot that has happened in the region and other parts of the world we can learn from. So we don't necessarily have to make the same mistakes. So in the fintech space, if you want to do payments, you again have to integrate with the commercial banks. Why? Because you can't hold deposits. So the biggest frustration that I see every time when I was running UBank, any fintech CEO or owner came to me, the biggest frustration was that we can't hold deposits. We have a beautiful business, the platform works, but none of the larger banks maybe are giving us time or listening to us, that we can maybe white label and work with them. So I think Pakistan is going through this evolution. And in the fintech space, I'm a firm believer with these my mental map, if I may share with you. There are these microfinance banks with branchless banking licenses. They're going to integrate upwards and start giving loans to larger clients, and become more and more sustainable in terms of capital and funds and all. Then you'll have the space for these digital banks, and there'll be a spectrum with this digital retail bank. Below this, you'll have the EMIs, TPSPs and all of that, and there'll be a whole spectrum here also. And these people will have a graduation path. That's how I look at it. The commercial banks, on the other hand, have 17,000 brick and mortar branches in Pakistan, and ATMs and CDMs, you name it, and all of that. A lot of infrastructure investment that they've done. And I think if I was a commercial bank, I would look at these as a threat also, because I have spent billions and billions in this physical infrastructure over the years that's not fully depreciated. I need to make money off it yet, and I'm employing maybe 40-50,000 people, in the branches and all of that. That's not going to vanish tomorrow, right? And the kind of society I told you we are in terms of client interaction with the people also. So I feel that the fintech ecosystem in Pakistan, over the next 5 years, you will see a few very strong ones. The rest, I think we will still see as integration partners in terms of payments, or somebody who's completing the loop, embedded finance and all of that. And embedded finance, also a lot of NBFCs are getting into this. Now the banks will wake up to this also, Arjun.
And so I'm gonna actually put the question here. See, so what you're saying is not dissimilar to other markets. It's the same thing playing out, right? Here also you have massive issues with balance sheets. Where does the access to capital come from? Here also you have the fact that here, as in several markets, fintechs cannot hold deposits. Therefore, they find it on the hard time. But if I just simplify the world of fintech overly, there are infrastructure fintechs. And I wanted to ask you the question because I would imagine they should be starting to play a very interesting role, and especially even for these large banks who have deployed tremendous amount of capital on their infrastructure, that does not forbid them from working with fintechs and come up with smart pricing on their infrastructure in terms of where they can pass the infrastructure cost onto a fintech, but then modernize at the same scale. And you're starting to see that globally. And then, yes, there are fintechs who provide products, right? But there's also another angle which you've just mentioned, right? And or maybe I've just picked up that scaling issue that you've talked about, right? That fact that I want to be intimate but still be cheap, right? That network effect, aren't you seeing enough fintechs providing that network effect? So if I break it down to these three categories, network effect, providing infrastructure, and then the product ones. I'm less bothered about the product ones, to be honest with you, because you're correct. Anyone can catch up, right? If fintech makes a product, people launch BNPL, they say it's like the end of the world. There's nothing new about it, right? We can do BNPL, has been in our part of the world. BNPL was there before, my great-great-grandfather was dealing with it. They called it different things and so on and so forth. Where is infrastructure? Are you seeing good fintech infrastructure players in the market?
So Arjun, we have to step back and see at what stage is Pakistan.
But you've built so much infrastructure yourself. You just mentioned.
About the fintechs, I'm saying.
Yeah, but weren't the fintechs helping you build that infrastructure?
No. So we were I'll give you an example of the bank that we were running, right? So we were doing our own branches. We were doing the conventional ATMs. We were putting up our own distribution and buying the Temenoses of the world, conventionally, right? So we were investing heavily in technology and in physical infrastructure also. What you're mentioning is, and this is where I said that Pakistan can leapfrog and needs to learn from the rest of the world, which I think is going to start happening once the international market opens up for Pakistan. And that requires regulatory intervention, will of the government, and many other things that we can talk about it, But at the moment, the product ones are out there for the last 8-10 years, and many of them have failed, and many people have been discouraged also, I'd say, but many are very resilient, and they believe in the market is there, the opportunity is there. So I feel, as I said, the 5-year horizon I was saying, there will be a natural evolution, and you will see these two other sides of fintech. At the moment, I can't think of any great example from Pakistan, any particular entity that is making strides in this particular area, per se. And I think it's a life cycle issue, Arjun. I think it will happen, but it will take some time. And I think we are moving in that direction, maybe 5 years.
Very quick question on this before I sort of go into sort of the last bit of the discussion. Are the banks, the established ones, and even the established micro banks, right, are they proving to be good partners for these technology players, fintechs, or they all see them as threat and therefore none of them really want to work with them? I know I'm asking you to pick a binary thing.
I understand.
Reality is never binary.
But I think there is acceptance. There is acceptance because the banks also realize that this whole business of investing so much in physical infrastructure and to get to the next level of scale, they can't do it like this. So there is understanding, but we are going through that mental transition also, Arjun, at the moment. As far as the microfinance banks are concerned, they're more agile, right? They're smaller, they're hungry, They're challenger banks, right?
And they're built with the fintech mentality
Yes.
to an extent, I
So
would
like
imagine.
three of
right?
them were owned by telcos, right?
Well, there you
and
go.
The, so that was in our DNA. That
Right.
we need to build wallets, we need to get to scale,
Yeah.
because when your parent company has 100 million clients, you can't show them 200,000 clients,
Yeah.
right?
Yeah.
So even if it is for credit, so that bit is helping the microfinance. The larger ones, again, there is a spectrum in banks also. Different medium size, different psyche. The large ones are too large. And those are the ones all over the world which are most difficult to actually adopt or change. But I see over the last 3-4 years, I think post-COVID, post-flood, after the lockdowns, everybody, I'm sure it's the case with the rest of the world as well, the banks particularly realized the importance of digitization, the importance of having partners that can serve their clients. Or if you can't do it yourself, maybe you can have a fintech or a partner, a wallet provider in pure vanilla kosher terms, who can actually offer people loan repayment, savings and money and all of that. And the ecosystem has to be developed. One more thing I'll mention here, and in the context of branchless banking, why we could not achieve what we were planning to achieve in 2008 till now, not 100%, because the ecosystem is required. When I say that 9 trillion rupees are outside of the banking sector, people love cash still.
Yeah.
I order food on an app, but I give the guy cash when the food is delivered.
Yeah.
Right? So this is where Pakistan is stuck right now, because if you can have the best of technology, you can have the best of strategy, but if the rest of the players in the ecosystem are not willing to play ball, this is where we are stuck at right now. And I think regulation, push, financial literacy, digital literacy, telling people that cash is the most expensive.
It'll take time.
Right? But people don't look at it this way, at least in Pakistan.
No, a lot of other parts of the world.
Yeah.
Lots of other parts of the world. People say cash is dead. I basically say, stop saying that because you want likes on LinkedIn.
Yeah.
Right? As a matter of fact, I posted something at midnight last night because I had yet another conversation around how cash is dead, because it isn't dead. I think, and it's very important. Cognizant of time, I have one area I want to explore with you and just want to hear what you guys are doing, because I think it's a question that comes up across. You kept using the word the S of the SME, right? I'll go down and use the MS, which is the micro and the small businesses, right? My hypothesis, at least from the work that I've been doing over the years, has been that there is as much a liquidity crunch than it is a funding crunch for them, right? It is the point of need, right? How are you guys solving for that as a nation or as a player? You can take either view. And are you guys being able to make the leaps which actually can teach the rest of the world? Because to be honest with you, what sort of annoys me in every market is how poorly the MS and the S are served, including here. Right. In the UAE, where, we have, 40 odd banks, so there's no shortage of banks. What are you guys doing differently?
So we
What's
call
working?
them the MSMEs.
Yeah, we call them
Right?
the MSMEs.
The MSMEs.
Yeah.
And then they're one notch below the S per se. Now let's take a balance sheet approach. And I think I'll dovetail what's happening to these banks with these. So first, you have an MSME that has a working capital need. Right? They're maybe in exports or whatever, and the money is going to come in 60 days time, and they need to do the next order, the conventional. You know? And that's where these guys are mostly stuck. And you need partners to come in and finance the working capital cycle, for instance. The issue that's happening when I say that the microfinance banks need to graduate, these banks, the larger ones will not touch them because of business model constraints.
Okay.
In Urdu, if I may say, vara nahi aayega. Right? So they will, and in their defense, with the infrastructure cost, the way they're structured, the funding, capital,
very hard for them.
the ticket size is too small, and there is reality to this argument, right? So the smaller ones, it has to be a bottoms-up approach. The smaller ones were formed to do productive loans, particularly in the agri sector, and then some part, trade and all also. What we've been pushing in regulation also, currently, microfinance banks cannot issue a financing line per se of, say, 300 million rupees to an MSME or which is required, right? So the natural progression is, and if the microfinance bank can do that, does the microfinance bank have enough capitalization or flow of cheaper funds?
Well, that's how I was going to ask you. So even if the regulation allowed you, would you have that flow?
Yeah, so you need to look at both the sides of the balance sheet. So for instance, tomorrow, State Bank allows the banks that you can do this to these guys and fund them, no problem. And that's a great thing. At the same time, you've got a capital adequacy of 15%, which is higher than commercial banks. You raise funds at Kabeer plus, Karachi Interbank Offer Rate plus, because you cannot compete with the larger ones on their basis. You have no access to the discount windows, or bulk of the guarantee schemes that are given to the commercial banks, that we are working with the central bank and SCCP and other parts of the government to allow these funds and cheaper funds or capital enhancement instruments to come to these banks. So the problem is, without getting too technical, I'll give you a few numbers, and I think that will answer your question fully. The microfinance sector has less than 100 billion rupees of capitalization.
Okay.
MFIs and MFBs. Leverage to 500 billion rupees, bulk of it is unsecured. Okay, so maybe we've eaten up, say, 60% of that capital already. Now the government wants these institutions to come in and support the MSMEs and SMEs. The funds that we're picking up at, say, 22% right now. The infrastructure investment and the recouping the cost is, the payback period is, say, 2 years, 3 years time. So there is a structural issue at the bank side. Hence, the banks are unable to serve the MSMEs or SME fully the way they're supposed to. What we are doing right now, and we are very hopeful that the finance ministry, we're going to meet the finance ministry and the central bank as well, and the new people at the central bank are very, very receptive, and we are doing a lot of paperwork with them and submitting proposals and all. 2-3 things I would say, Arjun, that this industry, microfinance banks particularly, and as the chair of the network also, I'm a big proponent of that. The minimum capital requirements, the capital adequacy Basel regime, the access to discount windows, and there's something known as scheduled bank status in Pakistan, which the commercial banks have. Many corporates cannot put their funds with microfinance banks because they're not scheduled banks.
Okay.
So there is the ability to raise deposits from them is impaired.
Okay.
Right. So cheaper funds, capital enhancement instruments, better capital adequacy and MCR requirements will support these banks to actually open up the asset side. If you open up the asset side, and we do not take care of all these things on the liability and the capitalization side, nothing will happen. So it's a two-pronged
But I
thing.
totally get it, right? But what you solved is a very simple economics, it's kind of 101 economics, right? Why doesn't the regulator, the central bank see it? This is not a problem of yesterday. It's a problem which has existed, I guess, from the time the country became independent.
Yes.
So why is there such slowness? And let's be honest, it's that sector which is the engine, right? They are the ones who hire. I don't know what 90% of the workforce of the country is hired by micro, small, medium-sized enterprises, right?
In any economy.
Any economy, right? And more so because, you guys are not fossil fuel driven. So in fossil fuel driven, it's slightly different.
Yeah.
You could say Saudi Arabia is like 60%. And so on and so forth. But what's,
So in their defense,
even if they were to solve the capital flow issue, forget getting the capital adequacy right and the scheduled bank. But if those grants were coming in your direction, your cost of borrowing went down and you were able to borrow or have larger sums of money to let out, I'm assuming you would get attracted, right?
Of course. So I'll tell you, in their defense, so we were moving very fast towards it until COVID happened.
Okay.
And that is the real problem that the industry faced. And the regulator was opening things up, the loan limits, you name it, everything was coming our way. 2018, 2019, we were happy campers, everything. 2020, COVID came, the whole world went into a lockdown. Like every other country, Pakistani central bank also allowed payment holidays for these clients, 1 year, 2 year, whatever. Once when that happened, the sector ended up restructuring 120 billion rupees worth of loan out of 300 billion at that time.
Okay.
Right, because it was a lockdown. And and I'll explain here, in microfinance, it is quite the opposite of consumer banking, where you say don't kick the can down the road. In here, when you give them time to recuperate, you get your chances of collecting the money gets better because of the crop cycle, double crops, maybe bumper crop. In floods, the receding water, the crops were even better. They could pay more easily later also. That happened, Arjun. And after that, few of the institutions went underwater in terms of capitalization because of defaults, which were not usual. Now that, unfortunately, coupled with the floods in 2022, further, made the situation worse. So the regulator had to pull back for this time period. So there was a freeze in terms of other good things that were coming our way in terms of capital. And so they do understand, but right now what's happening, Pakistani microfinance sector is resetting itself. So there'll be mergers you'll hear of, there'll be acquisitions you'll hear of, you'll be seeing more capital coming in, which again is coming from the sponsorship of the central bank. They are pushing it. They're asking more people to come in and acquire these banks. Once we are back onto our feet, I believe that all the things that are stuck in the pipeline will come, because there is no debate, as you said, that this has to be done, and they understand. But the vehicles that they were banking on went through a phase last 4 years. This is where we are at. And I think by 2025, I think things should start opening up.
Okay, sorry, I'm going to keep one last question, and then you can run to the airport, right? Fintech's going to take time to form, right? If I say extended banking is going through a period of flux, right? There's lots of smart guys like you there. Are you guys facing a complete brain drain in the country right now?
So that's a tricky one. That's a tricky.
I know you need to be the
I want to be
spokesperson.
politically correct in this one. There are various reasons for that, and you understand that on all what's happening economically in any country. If you are going through an economic slowdown, you lose good people.
I do.
You see, but if you ask me to talk about myself particularly, right? I see this as a huge opportunity. Whatever is going on. And there are genuine parties. There is push from the government, obviously, that people should stay back, people should work, and there should be incentives. And I think things will open up. We've had a depressing last 2 years, no doubt about that, and we've lost many people, good people. They've gone elsewhere. But I feel that with the right policy framework, this will, because the opportunity is real, Arjun. Even if you look at it from a selfish point of view, somebody wants to make money, somebody wants to make a name, somebody wants to serve their country out of patriotism, whatever. And people do want to, of course they do. So I feel with the right kind of framework, this will get better. But currently, yes, last 2 years, we've taken a huge hit. And if you talk about it, financial services particularly, the recent...
No, I'm talking specifically financial services, fintech, young, enthusiastic innovators.
I think there is no dearth of talent in Pakistan.
None, I would imagine.
And I feel that if you look at the number of firms being registered in the recent past in NBFCs and all, that speaks for itself that they believe in the market still. And I feel that it's a glitch, I would say, if I may use the term, in terms of talent pool that we faced. It's going to be self-correcting.
You're definitely a poster child for any youngster who does want to stay back. I know I don't say that in a light-hearted manner. I follow you quite actively. I see all the good work you keep doing, and I think every time you put out a message, I think there's a positive sort of sense to it, which I think is essential, because I think the generation which is coming through needs to see people like you showing that level of commitment, right? And I guess, fine, part of it is that you're a chairman and therefore you do, but I do think you truly believe in that, right? And which is why we don't see you working in the Middle East or having moved here. So no, I wish you the very best. I appreciate you coming in. I know you're starting a new role. We're not going to talk about that right now, but I guess whenever the right time is. So congratulations on that sort of new role. I think it'll be quite interesting, because you guys are going to be partnering with a fintech which operates in multiple markets, including the Middle East. But I think you're there to shore up the business in Pakistan, which I think that fintech is doing pretty well on. We'll not name the fintech, because I know that you're going through a regulatory process and so on and so forth. Thank you for coming. I hope you enjoyed your time on the couch.
Thank you for having me over, Arjun. And I think it was long coming. And thank you very much for your kind words. And I have to say this, that you're doing amazing work, and I thoroughly enjoyed myself. Thank you so much for having me.
Thanks a lot. And hopefully we'll get some Pakistani viewers now onto the show, because that's the whole point, right? So ladies and gentlemen, that's Kabeer Naqvi. He is the chairman of the Pakistan Microfinance Network. I got it right. He's obviously heading back home now to become a CEO of a new bank. That's as much as I can sort of share with you. So with that, goodbye, and I'll see you guys next week.